Good morning, everybody. So today's Tuesday, May 23, 8:30 a.m. Let's talk about. I already give you guys a brief about what's could be happening today. So again, major support. As you can see, the spreadsheet usually the dark pool spreadsheet show all the levels to you guys. Just look, just use it as much as you can. Now I have been posting every single day. As soon as I update, I put my comments in the dark pool spreadsheet channel. Okay, if you guys go every day, let me put the Discord here in the screen. Hope you guys can see the Discord. If you guys go every day to dark pool spreadsheet, I have been putting over here. So now feel free to download and make any change as you guys want. So yesterday, what I present to you guys in the intraday update levels. So first of all, you guys have all the gamma structure that they've also posted over here, and I post like two graphs that I explain. We still have in lower volatility, so 4,195 up to 4,200. So it's still the major support resistance, breaking this 4,210. Okay, but you observe that we have lower implied volatility. So we don't have too much premium to the upside. Nobody is interested to buy, above 4,200. Also, for the, for the lower levels, 4,175, 4,180, you still have lower volatility. Could you hold the market? So because that I put in green. So the premium we start to see premium, in lower levels, lower than 4,150. Okay, you guys observe that all the implied volatility is really low. It's really low above 4,200. So nobody are interested to buy above 4,200. That's a very easy thing, to analyze. Just look in the option book day by day. So 4,195 up to 4,200, that's the key resistance region. We don't need to go to the gamma, to look for the call wall. You just look for the implied volatility. That we don't have too much premium from the upside. We start to have much more premium from the downside. I put all the levels over here, highlighting in red and in green. So we're supposed to be see buyers, between 4,080 and 4,075. As you can observe, the implied volatility for those levels in the put is lower, and in the call is 3% and higher. Okay, so I'm expecting people defend those regions. Okay, I'm expecting people defend those regions. So 4,145 up to 4,180, that's the first resistance. If you lose, we will back test 4,150. Okay, so that's the downside levels. The upside levels, I also put over here. We have a gamma wall at 4,200. If you break, you have sellers at 4,205. If you break 4,105, since it's not too much, low, negative gamma that you have, we can highly up to 4,120. Okay, because that I put breaking 4,200, 4,195, 200, resistance 4,205, and then maximum 4,220. But in my read, we will not break 4,210. Okay, why we will not break 4,210 according my read? I put, you know, all the structures over here, the possibility to do a put spread or a call spread today. But let's go back to the spreadsheet and check it out. Why, you know, in my point of view, in my perspective, in my interpretation, we will not break 4,210. Because if you check in the book, they sold, you know, more than 3, 6, 700 millions in 4,200 calls, 4,215, where the break-even is 4,210. Okay? Consequently, I'm not seeing market, you know, break 4,210. Maximum backtest that region. So you guys notice that the deltas are flat. Today, you know, at the close, supposed to be flat or gap up, very different than yesterday, that supposed a gap down, and we open flat, right, with a small gap up. And today, the future suggests a gap down, not something that you need to be worried. It's 10 points, 0.26, okay? But it's really different. You know, the structure today was a trap. But the book, you know, as I explained you guys, the book, you know, shows us much more premium for the downside. The book shows us direction to the downside, as I explained to you guys. Consequently, I told you, you know, call spread is safe haven. Sell a call spread is a safe haven nowadays because we don't have premium to upside. Zero premium. Somebody that, you know, come to you guys, oh, bear market, you go above 4,300. Nowadays, structurally is not showing that. Okay? In a near future, we can go. Why not? You know, market's market. You know, dealers know how to make money. But so far, we don't have a premium to the upside. That's what people need to understand. So, ask question when somebody comes to you and give a call, let's buy SPX because SPX go to 4,300. Ask question. Ask, you know, why they think that you go up to 4,300, or, you know, a blow off top that's, you know, a lot of people post in Twitter. You know, ask question. If then you evaluate if they will be able to provide their answer or if they are guessing, they are playing casino, right? The majority nowadays have been playing casino. You guys notice that I start to put, you know, the book, the option book. I have been highlighting this in the dark pool spreadsheet, and I also put the gamma structure, okay, just to give you guys a visibility how the structure is. Also observe that you have more than $500 million K exposure in gamma in a positive way, means people are long. I have been seeing a lot of bear case, but the book is bullish. The put call rate is still lower. Let me open the Thinkorswim. In general, the put call rate is still lower in general, as you can see. Russell 0.49 is really low. SP 0.66 really low. Even in the index, the CPCI is below 1. So the majority is long. Okay, we could see a big shorts in NVIDIA. I don't know, I don't monitor those stuff. That a lot of people have been saying, oh, a lot of equities have people that have been buying a lot of puts for protection. I also put in the chat, you know, if you start to see a lot of puts in specifically, you know, assets, or in the majority of the assets and not in the index, as you can see, the index we don't have too much. This now could generate a gamma squeeze now for the downsides, not for the upsides. Because that you guys have been seeing a huge, you know, spike in techs, because, you know, dealers bought a lot of calls Retail sold those calls to them. Consequently, we saw a big spike in techs, more than 20% from the bottom. But if you look for the monthly graphic, you guys will see that's not going anywhere, right? Yesterday, for example, who melt up, SP 500 up to 4,210? The real economy, the Russell. No sense, right? It's basically a rotation. Look at Dow Jones. Dow Jones is already showing us weakness. Dow Jones is already showing us that we will enter in a recession sometime, at some point. When? I don't know. I really don't know. But, I show you guys that Dow Jones is real economy. It's GE, it's Disney, it's Caterpillar. It's a couple of stocks that basically is the real economy. And as you can see, the Dow Jones is really weak. So, showing us that we will enter a recession at some point. I don't know when. I'm seeing a lot of anxiety in the market. Okay, a lot of people say, "Oh, the market is not dropping anymore. The market is resilient. Tax is resilient." I have been listening this as soon I start to in financial sector when I was 19 years old. Of course, I didn't born, back in 29 and 40, and consequently, I didn't, had experience to tell you guys what happened back in 1929, what happened in the period of the time between 1965 and 1975. I just studied those periods, but I didn't live those periods. So what I'm looking right now, anyway, let me go back this later. But you guys observe, I already said Dow Jones is showing us that we have a weak economy. Okay, that's a point. Russell just pure rotation. They try, they already back test 2020 bottom, if I'm not wrong, and then spike a little bit. Okay, but it's also sideways. But the good thing, and a very good index that you guys need to monitor to really see that you will enter in a recession or not, is the Dow Jones Transport, just DJT. Transport is a key, a key part of the economy, because part of the logistics is how we, deliver things. As soon as you start to see Dow Jones Transport is going down, is because we will enter in a recession. Okay, and as you can see, is also very weak. It's going sideways, more down than ups, but sideways. Bullion banks really close. Dow Jones Industry is already traded below EMA 50. That's a bearish pattern in a weekly graph. All the EMAs is pointing south. Don't show any hope to go up. So the next levels is backtest the move average 50 at 13,061, losing we could backtest the WMA 400 2,459. So that's the setup for the Dow Jones Transport. It's really weak as well, and this is a very good index to monitor. Part of the Dow Jones, and Dow Jones showing us that we will enter in a recession. Okay. So today I already give you guys the level. Hope you guys understand. I just want to give you more a brief about the markets. It's too much anxiety for bulls and also for bears. Market has, nowadays a lot of buyers in both sides, in both sides. As you can see, market came from 4,800 up to 3,400, now to 3,400 up to 4,200, right? So bears went in control since last year, and now bulls, of course, back control, but bears is not allowing them to break 4,200. So market is sideways, but the buy is too big. Soon as you have higher bias and we don't have like a moderate, market, a bias, we have a really extreme bias, dealers will keep this sideways because that's very easy to collect money. Very easy to collect money. So what I have been doing? Call spreads. As soon as I see the market will be start to recover, put spreads. And collect the money, collect the premium, buy long puts. Don't use your money. Take the money from the market, get half, percent of your profit, and buy a long put. If Theta hold that premium, it's not your money. It's 50% of your profit. Yesterday, I sold call spread. 50% of my profit, I bought long 3,900 puts, SPX. 50%. The other 50% is in my pocket. Okay? So I'm willing, to lose 50% of my profit. It's not my money. It's market money. That's what I have been doing. And this is what I have been teaching you guys. How to do, how to short the market. Right? That's the goal. You guys have been following even, the old group. A lot of people just, trade in a different ways. Instead of to look like structure, they look, what they learn. And sometimes, the majority of times, they got screwed. Because they don't look, for example, implied volatility. They don't look where the premium is located. That's the important things. And of course, this is changed a lot during the intraday. As soon the dealers, robots start to see money entering the puts, of course they switch the size. Okay, let me collect money. Let me bring market back up. And this is also good for them because if they want to sell, they will sell higher. Okay? Squeeze doesn't mean that they are buying. Somebody will buy, but it means that they want to sell higher and they force people to buy higher. Okay? So, levels, I hope you guys clear. 4,195, 4,200 is still the major resistance. My maximum upside is 4,210, but my personal read doesn't break 4,210 as I show you guys here in the dark pool spreadsheet, because those guys 700 million premium sold call, they want to collect the money. 4,117 are the major resistance. Why I told you guys that 4,117 is the major resistance, line 435? Because this person sold 4,150 call. Is in the money, of course it's in the money, but the break-even is 4,217. Because the person that bought from him pays $67. If market's not going up to there, this person will not exercise. Because this is cash. This is not asset. This is pure cash. The person that bought this call need market above 4,217. Otherwise, the person that bought will not make any money. Okay? And you guys see, this contract is already devaluated 12.28%. Okay? Consequently, that's the reason I told you guys yesterday that for me is the major weekly resistance. Also is the biggest order that you have in the book, if I'm not wrong. One of those. Remember last week I told you guys doesn't make sense to market, going down up to Friday because the huge amount of puts. Let's go back to Friday. I don't remember if it was Friday or last Friday on the OPEX. Yeah, it was Friday because you have huge puts, premium in the book. You just see my screen, line 1000, whatever. So 21 millions, 129 millions. So it doesn't make sense, to market going down before, last Friday. A lot of premiums to collect. Of course, dealers sold this premium. Especially, remember that I highlighted a lot last week, the key level is 4,138. That basically was hanging man left 3 weeks ago, 2 weeks ago. And because the premium in this put 4,000 K strike, that the break even is 4,137. So the person that sold 129 millions forced the market to close above 4,137 because the person, this dealer, this maker, this CTA, whatever, was looking for collect $129 million. Same as we have right now. Now in call side, because everybody bought call. Okay, everybody is looking for 4,300. So this person again is looking to receive $2 million premium. Was a block trade between peer-to-peer, because that I'm looking for a major weekly resistance 4,217. Okay, breaking 4,217, 4,220. Okay, so this is the levels that I'm playing. Again, I don't think we break 4,210. 4,205. Now we have sellers, not major, we have sellers. Breaking 4,205, 4,210, where people sold calls. We have also a gamma wall, not bigger, but we have. And then 4,217 first, because the order that you saw, and the last level 4,220. But remember, highlighting again, we don't have premium from the upside. We have much more premium to the downside. Okay, guys, levels already provided. I already give you guys, a clue regarding recession. Dow Jones transports, Dow Jones index that show us weakness. We cannot see a SP 500 being melted down through Russell. This means rotation. They are trying to bring, some assets that already, made like an intermediate bottom. So they have, a opportunity to melt up, to test the EMA, to bring back down. As you can see in the Russell index, now they are testing, for example, the MA50. That's, the light blue. If they wanna push, my maximum size upside is the WMA 400 at 1,145. I don't think it will go there. I think the MA50 will hold the market. Okay, but if it breaks, I'm looking for WMA 400 at 1,145. Okay, my vision will not break MA50, light blue line. Okay, for me, that's the target. Other things about recession, about market anxiety, and where we need to look. This is the gamma design. You guys, you see that you have another big gamma wall at 4,300. Move the market, we need 29.50 millions. Okay, it's a lot of money. Repeating, we don't have premium above 4,200. So it's very difficult to break 4,200. It's very difficult to backtest 4,300 today. Nowadays, it's really difficult. If everybody's looking for 4,300, we need to go down first. We need to enter in a negative gamma and then squeeze again. And then we could go back to 4,300. But at those levels, at those moments, with those lower implied volatility, no premium to upside. Much more premium to downside. To go at 4,300 as the majority is looking, we need go first lower because we have much more premium if we will go lower. And consequently, we'll clean those gamma walls, right? And make market ready to go up. I'm just trying to explain the structure of the market. How the market could you do another squeeze going up to 4,300. Market need first to clean this gamma wall, too much money, with lower implied volatility, with less premium. Nobody will buy. Only retail. Nobody will buy. Big players will not buy because don't have premium. Period. Hope you guys understand that. Squeeze up to 4,300, we need to clean this up. We need to see implied volatility is going high in the call side. We need to see, lower price in the call side. Nowadays, it's very cheap to buy insurance. Repeat, I'm trying to repeat, to put in guys' mind. It's much more easy, much more premium to go down, clean, and then we could squeeze again. When we see squeeze, when we are in a negative gamma territory. Why? Negative gamma territory. Sell weakness, buy rallies. Consequently, squeeze. Positive gamma. Sell rallies, sell strength, buy weakness, buy support. Right? But we always see a gamma wall. We will always see a lower implied volatility in higher contracts that cause, a limitation of the upside when we are in a positive gamma. Squeezes only happen when, dealers clean bulls. Bring, euphoria to bears. Make market prepare to squeeze back again. Okay? Nowadays, we need to see the market with premium as a downside instead of upside. Hope you guys understand why. Is also post in the dark pool spreadsheet the book with the implied volatility and etc. Also, you guys already noticed. Let me go back to the Discord again. Let me go back to the intraday updates. If you guys want to monitor the DIX, the GX, and the GX, you guys don't need more to go to Squeezematic. Okay, just run exclamation DIX, and then the chart give the information to you. You guys notice that the DIX dropped almost 5%, came from 53%, if I'm not wrong, to 48.93%. Means no bias above 4,200. Yesterday was really nice when Anthony, shared the book map. You guys realize that when you reach some level in the future, sellers jump in, bring market back down. And also you saw an intermediate bottom at 4,190. I'm talking about the ES. I don't remember what the level in the ES. But, the book market that Anthony show us, a support in that level. Buyers bring market back up to 4,200 something, I guess 4,210, and then bring market back down. So as you guys see, GX dropped 5%. Exactly what I have been telling you guys. That's not... we don't have premium above 4,200. The GX is still higher. Still higher means lower movements, not a crazy movements like 1% down, 1% up, a lot of volatility during the intraday. So volatility has been controlled because you have a higher GX, but drop from 4.5 billions to 2.5 billions has been dropping. Right? As soon as you start to see a lower GX or a negative X, so we could see another squeeze or we could see a crash. Okay, crash and squeeze happens when we have or negative GX or a very lower GX. As you saw, I guess 2 weeks ago in one of those Fridays, that I looked for 4,150, but I apologize myself because I did a wrong reading. I told you, oh, it's not going anymore there. And then went above, I guess, went to above, 4,150, 50 something. Was like a bad read from my side, because retail sold those calls, but dealers bought. I interpret like very different. But before at 11 something a.m., I told you, oh, somebody is trying to spike deltas at 4,150 more than 6 or 80%. Remember that? So the GIX that time it was 100 million. Now with higher GIX, forget crash, forget rallies. Market's really tight range. So put spreads or call spreads pay more premium. Safe haven. Since we don't have too much premium to the upside, as I have been telling, it's much more safe sell call spread. Okay, we have that's much more a safe haven than sell a put spread. They can release a trigger, and then markets could go down, and then you lose money, you lose the spread that you set up. Okay, but nowadays is a safe haven to sell call spreads. Okay, another point about bull market, bear market, if market is strong, if market is weak, if we really need to take risk or we need to save our money. I never seen in the history bull market start with negative yields spread, with a negative yield spread. We came from a bear flattening yields curve to a negative yields curve. So the bear flattening started back in 2008, as soon Obama changed the rule allowing Federal Reserve, to buy things in the open market. Then, from a negative yields curve, we move to a bear flattening curve. Market rally. Market rally since 2008. Of course, you had a corrections in the middle of the time. But remember, 2008, Lehman Brothers, negative yields curve to a bear flattening. When Trump won the election, the yields curve tried to move to, let me use a bull flattening, trying to move to give us hope about recovering the economy. But after 1 year, back to a bear flattening. And now we are very ugly, very negative. Bull market doesn't start in a negative yields curve. Hope also you guys understand that. Okay? Bull market never start like this. Never. Especially the spread between 10 and 2. At some point last year came to minus 100%. 100 BPS or whatever they want to call. So we are not in a bull market. Also, bull market doesn't start when we are in a KT. People still confusing that 2011, like Chris posted yesterday, in 2011, 2010, 2011, the same debit ceiling, we saw a huge drop, but then, market recovered. We were in a KT environment with some big issues as well. Now we have big issues in a KT environment, not a KE environment. As you guys see, yesterday I posted in Twitter, the mortgage rates jumped again above 7%. Why they, higher, they put higher the mortgage rates again? For sure, they are seeing foreclosure. For sure. So they don't want to borrow money. So, less of liquidity. Okay? less of liquidity. Also, look how people think. I don't want to expose people, but for me that's totally unacceptable, especially when you sell, a financial service for a public. I'm not evaluating, people performance. I'm evaluating what people is talking about. Let me just put in the screen. I was blocked for this person because that's totally acceptable to tell shit for your customers if you are playing like a financial advisor. We have an issue. We have a big issue in the world, and we have a big issue in the United States. Of course, that the issue that we have in the United States have been postponed, I guess, since 1970s, right? They have been postponing the default since 70. It's like, you don't want to clean your house and you put out the mess, under the rug. One time, in some point, your rug will be like a mountain with a lot of mess behind. Right? I'm not telling that you will enter in default because I don't know. I'm not a maker. I don't have such information. I really don't have. But I know that some players, big players, is looking for a big issue sooner than later. Doesn't mean that will happen, but they are prepared if happens. It's a little bit slow, but let me see if opens. So yeah, as I said, mortgage rate is back to 7%. That's not bullish. If they are high in, the mortgage, even wait for the next, Fed raise, is because they are already not receiving their money. So we are seeing foreclosure for sure. Look, this person. I don't have anything, against this person. But and also I'm not evaluating, his calls. Maybe he give like good calls. But what time is, like I told you guys, let me open over here. People cannot think that it's normal United States entering a default. People cannot, put like in a, because nowadays you guys have the power to propagate, good or bad things, fake news or real news. Now everybody, because the social media, have power to be an influencer. Especially those people that have more than 10,000 followers, 100,000 followers. This is not one that I want to show. So we needed to really care about our followers. We need to try to provide more accurate information. Anyway, it's too slow, but let me try again. Apologize about that. Guys, I also need to close that pre-market because I have now a meeting in my job. You guys know that I work for somebody else. I work for Verizon. So let's see if you open correctly right now. No, it's not. You open again the 7% mortgage. Anyway, so we cannot say, but to go to my Twitter, this person just just post like, if the United States default, do you guys think that people will stop to buy iPhone? Do you think that people will stop to buy things? Guys, if United States enter in a default, we will see one of the biggest recession ever. Could you be, more intense, more severe than 1929? Why am I telling that? I worked for Hewlett Packard before. Okay, our biggest contacts when I was Hewlett Packard employee was with the U.S. government. Was a $2 billion contract, 5 years. If United States stop to pay those bills, will we see a massive unemployment. Massive unemployment with higher inflation, we will see the biggest recession ever. So people cannot say that's normal, United States entering default. People cannot think that this is a normal thing. A big company entering default is a problem. Imagine United States enter in a default. The United States is the biggest country in the world. United States is the biggest economy in the world. United States is the country that provides financial health, the biggest country that provides financial health in the world. If United States, if the politicians decide to default the country, will bring us to a very huge recession. I'm worried because I work for Verizon. Everybody that works with technology supposed to be worried because those companies' biggest contracts are with the US government. Yes, if US enter in the default, people will stop to buy iPhone. People will stop to buy Lamborghinis. People will stop to buy Ferraris. People will stop to buy Porsche. People will readequate their lives. Okay? Guys, I'm finished by here. Hope you guys understand the level. Hope you guys understand where you need to look if we are a bull market or just a simple gamma squeeze inside the bear market. Look at the Dow Jones Transport. Look at the Dow Jones Index. Look at the yield spread. Look at the cost of the money. Look if banks, central banks are in a QT or QE. Look for liquidity. Dealers have been providing liquidity to the market. Remember that dealers need liquidity to get out. I cannot tell you guys if the markets crash. I'm not a dealer. I cannot, provide, in advance the black swan. I'm not a dealer. I'm just trying to show you guys that the current structure has more premium to the downside than to the upside. People that look for 4,300, we need to clean it up this gamma wall. We need to bring market back to negative gamma. And then we could rally back to 4,300. That's the correct movement that the market needs to do for those that are bullish. Look for 4,300 in the near term. Implied volatility too low. No buyer above 4,200. Huge resistance between 4,195 and 4,200. Support nowadays 4,100, 4,175. Usually bulls supposed to be jumping that region to bring market back to 4,295. Look today, especially for 4,180, 4,175. Losing those regions, we could backtest 4,150, as I said before. If I'm not wrong, 4,150 we see a gamma flip. Let me open the Gamma Lab website just to make sure. And then, anyway, it's not, but I can validate later. I guess 4,150 is where the gamma flips. Okay, so that's a good region that we start to see a squeeze. Okay, but 4,195, 4,200 resistance, 4,180, 4,175 support, losing support, 4,150, breaking up resistance. For me, 4,205, maximum 4,210. However, we have a resistance at major resistance because those ordered at 4,217. So the buyer of those call, could you try to bring the market at least up to 4,220? Okay, so those are the levels. Remember, call spread is